Hello, guys. Okay, so today I'm going to explain the strategy that my mentor taught me, and we are going to do some back testing with it. Yeah, I don't know who is the originator of the strategy, but this is the strategy that my mentor taught me. So yeah, let's go through it with the help of back testing. Okay, so today's coin is Solana, and we are going to randomly go back in time to let's say January 22nd. Okay. All right. So let's start our back testing. Uh, yeah. So how the strategy works is that first we go on to the higher time frames. We start off with the weekly time frame and we mark out three things. One is pivots, second is order blocks, third is fair value gaps. Okay, so let's mark out the pivots. I can see this is a pivot. This is on the weekly chart, so I'm just going to label it as W. Do I see any other pivot? This is a pivot, but this is too far high, so we can just mark it out later if price goes up there. I don't want to mark out this pivot because week is still in play. This is the current week, so price, no point. This is not the final week, if I might say like that. I don't know where the week is at, right? 17th of Jan. This is, yeah, 17th of Jan. I don't know. Yeah. All right. So there is a, we can mark this pivot as well. Okay, but price most likely won't reach there by the time we finish this video. There's a fair value gap here. We are going to mark this fair value gap. Okay. So it's a weekly fair value gap, so I'm just going to label it as weekly fair value gap. And order blocks, I can see there's a order block here. This seems like a good order block. This green candle. It's, yeah. The reason why I say it is a good order block is because it's a bearish order block, right? Because price just went down after this green candle. So order block is the is the opposing candle right before the impulsive move. So the reason why I say it is a good order block is because one, you see this wick of this red candle, it went above this green candle, so that means that price just took out the liquidity above it. That was done on purpose. That was manipulation by the financial institutions or big banks and all to take out the stop losses of people here. And so when they do that, then that means they don't have much purpose, or they don't have an immediate purpose to send the price back up again and take out the stop losses, right? Because they already took out the stop losses, so we won't expect much stop loss immediately afterwards. And then the other reason why I say it is a good order block is because of the impulsive move of price just uh, after the after the close of this order block, and also it left like a fair value gap. So leaving of a fair value gap indicates that there's a impulsive move. So, anyways, it isn't. I would say that it isn't even that great an order block. Uh, Ideally, I would have liked to see a much bigger move from this red candle, but it's okay. At least I'm expecting that at least when price goes back up here, there will be initial reaction towards the downside. So I do expect. And the other reason that it might not be a good order block is because this second candle, you can see it's inside this order block. So that means this second candle already took out some of the liquidity, some of the orders from inside this order block. If this second candle was starting below the order block, right? If the wick never entered or the body never entered the order block, that would mean that this order block is still untouched and there is a higher probability of a reaction. So all in all, I would call this medium level good order block in terms of getting a reaction. probability of getting a reaction. Okay, so there are some fair value gaps here as well. Let's mark it out because price might reach there. It's not too far. These will be put. No, this is just fair value gap. It is in the order block. So daily. No, so sorry, it's a weekly fair value gap. Okay, there's a fair value gap below it as well. Let's mark it out. It's again a weekly fair value gap. Uh, yeah, so we are done marking out the fair value gaps. We are done marking out the order blocks. We are done marking out the pivots on the weekly time frame. So now let's go to the daily chart. These are the higher time frames. As per our strategy, we mark out these things on the higher time frame. Okay, we mark out order blocks, fair value gaps, and pivots. So on the daily chart, do I see any pivot? Um, this is a pivot, and yeah, yeah. Never mind. I mean, there's already a point of interest. There's already a fair value gap above it, which is our point of interest. So we don't need to like double mark stuff. Okay, this could have been a pivot, but it's already taken out. So we are not going to mark it. There's a pivot above here, but it's above this, so we are not gonna mark it out now. Mm, maybe we can mark out this fair value gap. It's not too far from our current price. Okay, it's a daily fair value gap. Okay, let's extend it a bit. Price might take some time to reach there. I think, yeah, there are fair value gaps down here. So let's mark it out as well. Uh, yeah, let's just mark it out. Okay, it's very narrow. It's kind of like difficult to extend this. Oh my god, I mean, okay, got it. Extended price is almost reaching that fair value gap. You see, it will be interesting to see what happens there. It's a very thin, narrow fair value gap, so price might just like completely mitigate it and not give us any reaction at all from there. Wait a second, what's happening here? I need to zoom in a bit. Yeah, let's mark it out properly. Okay, yeah, that's the correct width. Let me extend it. Go up. Mm, yeah. Okay, it's out of my screen now. Okay, there you go. Okay, so yeah, these are daily fair value gaps. Let's just label them. Okay, it's too narrow, so that's why it didn't show on that one. But if we zoom in, it will definitely show that D alphabet. So no more pivots. Do I see any order blocks? I don't want to mark this order block because you see this other candle already mitigated that order block. There's a fair value gap here. I can mark it out. So this would help me to like refine my entry further, right? Because you see this order block that we marked, this pink color order block, bearish order block that we marked on the weekly time frame, it's too big. So like if we want to be more precise with our entries, we can enter at this fair value gap. You can expect a reaction there. So this is just refining. This would help to refine our order blocks, our point of interest, our entries and exits. Uh, any other pivots? Let's mark this pivot as well. Though I'm pretty sure price won't reach there. Daily pivot. Any other thing? Sorry, I got a bit of OCD. I need to do this properly. Okay, so we have marked out fair value gaps, order blocks, and pivots. I don't see any other order block here. So okay, let's move on to our further lower time frame, which is the 4-hour chart, and we are going to do the same. Mark out order blocks, pivots, and fair value gaps. So this is my 4-hour fair value gap. Okay. Do I see any other fair value gap on the 4-hour chart? There it is. It's already been marked. There is the fair value gaps up here. They are very small ones. So chart inside the daily fair value gap. So okay, I don't see any order block. Do I see any order block? This is an order block. You can see it has already been tapped into. Mm, yeah, I don't see any order block. I don't see. Do I see a pivot? Yeah, I see a pivot on the 4-hour. This is a pivot for me. On the 4-hour, this could also be classified as a pivot, but yeah, they might not be like very relevant ones because there's a pivot here, right here, which seems more prominent, more important, because I am expecting more stop losses to be above this compared to this and this. All right. Okay, now let's. Okay, so that is the first step of our strategy. Basically, mark out order blocks, fair value gaps, and pivots on the weekly, daily, and 4-hour time frame. And now ask yourself this question: where would price is likely going to move from this second step? Let's say the second step of strategy is trying to guess where the price is going to move towards, trying to form a bias. Okay, so at this point, it seems equally likely the price. I mean, we are in a bearish downtrend, bearish trend, like high, low, lower high, lower low, lower high, lower low, most likely, if it creates one here. So we are in a bearish downtrend. So I'm expecting price to go tap into this fair value gap below and maybe continue the downtrend further. Like, yeah, it looks like a free flow here. There is a bit of a resistance from, as you can see at this level, bit of a resistance. Price might want to bounce a bit from there, but it looks like a free fall from here to here. But before the free fall, price might also want to like mitigate this fair value gap a bit and then go down. So, so yeah, my bias is it's going to go down, but the only question is whether it's going to go down straight or it's going to tap into this fair value gap first and then go down. All right, so let's see what happens. Okay, yeah, it went down. It completely mitigated the fair value gap. So let's try to guess further what could happen. Okay, it could go down more. Mhm. And we have created another fair value gap on the 4-hour chart. Let's mark that out. Right. Yeah, so I'm still expecting a bearish downtrend. So if price comes back to this area, I'm gonna go down to the lower time frames and see if there is a reversal to go down further. Let's say I'm gonna switch to the lower time frame here because I might enter a long, a very small long. It's a risk. It would be a risky long because we are in a downtrend. But I need to see a confirmation. I need to see a break of this lower high to, and I need to see it being broken impulsively with a fair value gap to for me to enter a long. The other thing that gives me confidence of entering a long is because there is this looks like a sweep. Uh, I can't say for sure whether this is a sweep because we are on a very low time frame. We are on the 15 minute, but yeah, it does look like a sweep. Right, it has taken the stop losses below it, and now it could like basically go up. So that's basically the strategy. Basically, whenever you see us after doing all these step one and step two, and if you do a sweep, if you see a sweep like this, then enter on the you prepare to enter a opposing position. So if it sweeps a low like this, then you prepare to enter long, and if it sweeps the highs, then you prepare to enter a short. Okay, ideally, if that happens on the 1 hour, 4 hour chart, this that the stuff that I'm going to see next is not told to me by my mentor. It's just what I'm seeing on the back testing. I might be wrong. So yeah, so what I'm saying is that ideally I would like to see the sweep on the 1 hour or 4 hour chart, and then I'm pretty sure that okay, I can take a opposing position, and then I would switch to the 15-minute chart and try to enter at the market structure break, enter after the market structure break, and when the price reaches onto the fair value gap. Yeah, so let's see what happens. I'm looking for a market structure break now of this lower high. Okay, ideally a break with impulsive move, so it didn't happen. Yeah, okay, so price has broken price has broken structure. It has continued the downtrend. But I'm not going to enter a short because I don't know where will price move back to. It can move back to fill these fair value gaps and then go down further. We don't know. No impulsive move. Okay, see it just has the fair value gap, and it's looking like it's going to reverse. Again, same thing. If it this is the lower high that created this low, uh, so this would be a key lower high for me. And if price breaks this structure, I might enter. I need to see how price is going to break that structure. If it's going to break with an impulsive move, or it's going to break just slowly dancing around, then I'm not going to enter. But if it breaks with an impulsive move, then I will. Okay, looks like price is going to come back down and mitigate the fair value gap. You see, a lot of people might start entering longs here, but I don't, I think they'll get stopped out. Yeah, people would. I think price wants to go down further. One more impulsive move down. Let's see. Keep moving. Yeah, it created. Yeah, it's going down. Mitigating the fair value gap now, but price is still just okay. What is it doing here now? It has created a low clearly lower than that one. It has swept the liquidity below it. This was the lowest point. This is the high that created that low. This price has broken both this one and this one, but we can enter. I mean, if we enter long here at this fair value gap, so what you can see is that price has broken the market structure, right? Price has broken this high and this high both. Okay, so price might want to move up. Okay, uh, and when that happens, when price breaks the market structure, we enter on the fair value gap. Okay, the fair value gaps are here. Okay, but for me, this would be a risky long. I'm gonna take the long, but this would be a risky long because price has not uh, shown that impulse while breaking the market structure. I mean, there's a bit of impulse, but it isn't that much. Okay, so price this could be just a faker, and price might want to come back and take out our stop losses. But yeah, I mean, let's take. There will always be a risk, so let's take that. I'm going to keep my stop loss just below this, and I'm going to target the fair value gaps above. Okay, so it's also we have to be very aggressive in our profit taking on this long because we are going against the trend, or going against the higher time frame trend. Okay. Oh, shit. Price didn't come to this fair value gap, it came to this fair value gap and then it just shot up. Okay, so at this point we got to decide, do we still want to be in the trade, or we we because price can still come back here and it can go straight down, or it can come back here and go back up. So I think I will see how price comes back down. Okay, if it comes back with an impulse, then I'm not going to take that long. If it comes back like slowly dancing around, okay, I think I'm going to take that long. See, price is coming back with coming back down with small candles. It is not coming back with long candles. Okay, yeah. Mm, it's creating a very bearish structure now. I'm not sure if I want to take this long anymore. I think I think I'll get out of it. Yeah, so I won't take this long, but let's just keep this position here just for learning purpose to see whether how price is reacting to that. Mm, so price did reach our kind of like our target. Just imagine if we had put our entry here on that fair value gap, we would have gotten that entry. It's like from 87.05. This move is from 87.05 to the top of here, like 98. Oh man, that's like a 20% move, I guess. No, 87. It's like a 12, 14% move. Yeah, and it took how many days for that move from 25 Jan to 26 Jan? Just one day, like around maybe 30 hours, maybe, or 20 hours, 24 hours. Damn. Okay, let's see what price does next. Okay, so at this point I want to switch to the higher time frame and see what's the structure and everything. So we can take out this fair value gap because it has been mitigated. Okay, mm, this fair value gap. Okay, remove this. There's a fair value gap still above there. We can knock it out on the 4-hour chart. Let's mark that 4-hour fair value gap. This fair value gap has been mitigated to a lot of extent. I don't reduce it to here. Okay. Yeah, there's okay. You know what? I feel like marking this pivot. I know previously we decided we are not going to mark it, but visually just gives me a better idea of like there will be stop losses about that. Okay, so okay, on the 4 hour chart we are seeing prices in an uptrend, but I'm not gonna switch my bias to bullish until price breaks this wick with a clear impulse towards the upside. Until that happens, I'm gonna expect my bias is going to be shorts. Okay, all right. Okay, yeah, let's continue on the 4 hour chart. What does price do? My guess is price is going to take out the stop losses above this, and it might uh, fill up the fair value gap. Okay, so I'm thinking since we are expecting price to go up, why don't we enter switch to the lower time frames and see if there is an entry for a long. Okay, price broke this high with an impulse. There was a fair value gap created. Let's take another risky. I would just market enter here because yeah, price is already finished. Price has already like uh, finished the candle. Yeah. So like okay, I'm gonna enter, keep my losses, stop losses below this low because sometimes yeah, price just likes to come down and take out. Okay, this is my play. So yeah, remember I have market entered at this point. So let's see what happens. Oh, almost in there. I mean, ideally, I would have taken profit uh, sooner from 98 to 104. That was like 7-8% move. Yeah, I would have. Usually, I like to take profit at when there is a 1:1 already. Like so, I would have taken my profits around yeah around this level, and then I would have uh, maybe I would have taken around 50%, and then remaining 50%, yeah, I got stopped out. So yeah, the video is already like half an hour long, guys. So I will explain more over the next call. Okay. So nothing I say is financial advice, and you all take care. Have a good day, and yeah, please like the video and subscribe.